Hello, this is David Scott Peters with therestaurantexpert.com. You often get questions about financials. And one of those is, what does a chart of accounts look like for a restaurant? And there's some competing experts out there. I'm going to share with you what my view is in about 2 seconds. Hello, this is David Scott Peters again, and we're talking about chart of accounts. Now, there are people who are touting they've got the restaurant chart of accounts. This is the only way it should be done. Well, I'm going to tell you the truth is this. If you talk to any CPA worth their salt, they're going to tell you there's no such thing as a wrong chart of accounts. They all pay taxes. Now, there's a wrong chart of accounts for you to run your business. And I want to give you what I believe, what we here at therestaurantexpert.com believe is the only way to set up your P&L. No, not the only way, our way. And when we give this chart of accounts to our members, we say, hey, don't completely throw out your current chart of accounts. Make some edits to it. Because the moment you change your chart of accounts wholesale, you lose history. When you want to look at last year versus this year, you don't even know what you're looking at. So make sure if you're opening a restaurant, hey, adopt these. If not, you want to modify it. There is no such thing as a wrong chart of accounts. But let's talk about what makes it easier. So now if I look here, income, right? Sales. Notice it isn't food and beverage. It's bottled beer, draft beer, wine, liquor. It's everything separated. That's important because that way we can see where our sales are coming in. But more importantly, it reflects in cost of goods sold. We again have bottled beer, draft beer, wine, liquor, food. We separate them. Each one, when we talk about budgeting or wanting to measure success, they each have their own target cost of goods sold, right? If we want to look at thinking about it this way, I may be running a fine dining restaurant that's a steakhouse and be running a mid-30s food cost, whereas when I'm selling high-end cocktails, I might be running a 16% pour cost. Or because I've decided to have a call well, I might be running a 25% pour cost. See, it's very important to understand that every one of those line items has their own target, so they need to be measured separately. Now, the next piece is I bring in my labor, right? I start off with it because if you've seen my P&L video, I talk about there's a gross profit line, but then I want to get to an operating profit line. Instead of having labor all hidden in the P&L, I want them all brought up to the top so my prime cost is right together. So now I put all of my labor together, and you'll notice we have each of our positions. We break it out, busser, food runners, if you had cashiers, if you're a quick server, drivers, if you're quick serve, right? Doesn't matter. Notice it isn't front of house, back of house. Again, I will have different labor targets for each one of those positions, and then we add our taxes, benefits, insurance. From there, I like to group my highest priority or most expensive, if you will, expenses I have after my labor and my food, right? Well, what do we get? Occupancy cost. And notice in occupancy costs, I got rent, real estate taxes, property taxes, insurance for it, any municipal taxes. That's truly your occupancy cost. It's not just the loan that you have or your rent added together. Then we go to our utilities. From there, repairs and maintenance, and now we're into general administrative. That's, my office supplies, things like that. Travel and entertainment, shouldn't be much of that. Legal and accounting, and then our direct operating expenses. This is, notice now all of a sudden I'm not searching through an alphabetical QuickBooks chart of accounts. I see my glassware, my paperware, my smallwares all in one section, and as a grouping, I know what I'm spending there. My marketing and advertising. Now, I will put an asterisk on here. I have comps here if you're using it as advertising. But I may have a second line item for comps anywhere I want them, whether if you're following the letter of the law and you're giving your employees a benefit, it actually belongs in benefit, and they're supposed to pay payroll taxes on that. Most restaurants don't do that. You may put it at the top where you want to see it right under rent, or put it all at the bottom. But that would be for meals versus advertising. Then we have our bands and entertainment, and then our non-cash flow issues, amortization, depreciation, interest expense. These are more of an accounting thing to make sure the government gets the right tax payments. I'll give you, for instance, if you were to purchase a piece of equipment that has a 5-year life, according to the IRS, and you paid cash for it, call it $25,000, well, you're out $25,000 in cash today, but your expense will be $25,000 divided into 5 years of equal installments monthly, and that's what's going to show up on your profit and loss statement. Amortization's similar. For instance, if you were to purchase insurance, the first month of any insurance policy, for the most part in our business, is 2 months up front. The last 2 months, we don't pay anything. Well, guess what? Amortizing the expense shows an even monthly payment over 12 months. Then there's interest expense. So if you have an SBA loan, and let's say the payment's $12,000 and $2,000 of it's interest, the rest is on the balance sheet pulling down what you owe. Well, you may have made a $12,000 payment, but only $2,000 is going to show up on your P&L. So I like to take these non-cash flow items and I move them down to the bottom. That way they're important, but they're not that important to me in operating my business. They help me pay taxes. Otherwise, this is what a chart of accounts should look like. And I want to reiterate, don't completely throw your chart of accounts out the window. Now, if you'd like a copy of this chart of accounts, you can give us a call toll free at 1-877-457-6278 at extension 106. Ask for Greg Sauerbach. Let him know that you watched this video and you'd like a copy of the chart of accounts.
This is David Scott Peters. Thanks for watching this video. Be sure and subscribe now to my YouTube channel. But before you go, download my free report. You'll find the link below in the description section. And be sure not to miss these other videos with expert tips to help you run your restaurant.